Great, ladies and gentlemen, let's now get going with the journals and the general ledger workings. Now, these are not required in the exam, please. These are purely here to make sure you have the correct understanding of the methodologies that will be needed. I'm going to ask you to do this for exercise 2.1 and potentially one or two more of the homework items. Later on, you can come back and do the questions and try and leave out the journals and the general ledger and see if you can take the figures and your understanding directly to the financial statements. So let's get going. I'm going to scroll between the original read-through question that we did, which was all covered with my handwriting, and then I've drawn up a template based on all the journals we did in the previous lectures. You should be able to write these out. I wanted to save some time in terms of how quick these videos are. So let's get going now. First of all, capital accounts. Were there any capital account movements? There were no movements in the capital account, so there's no need to record any contributions or withdrawals. So those are not applicable. There was nothing that went through the capital accounts. Next up, the current accounts. Was there going to be interest on a capital account? Yes, there was. If you go back to your question, remember we were told there will be 5% per annum on the opening balances of both the capital and the current accounts. So let's pass those journals now. The capital accounts, I'm going to do my workings in red. The capital account for blue, opening balance was 20,000 per the trial balance times 5%, and that interest then would be 1,000. Okay, for red, we had an opening balance of 5,000 times 5%, gives me 250. Total interest on the capital account that goes to the appropriation account, please, 1,250, and we have a debit the appropriation account and credit the two current accounts. So we make the two current accounts bigger on the credit side because they're equity, and then the appropriation account will be debited. Next up, interest on drawings. Now, interest on drawings, we had that funny one where it was calculated monthly, right? 5% per annum on the average monthly balance. We reminded ourselves to refer to 2.7. So under 2.7, they were nice enough to give us the interest on the partners' accounts at 320 for blue and 80 for red. So we can go and put those straight in. So here we're debiting the current account, remember, because the drawings account has a debit balance, right? So 320 and 80. We're making the current account smaller, and the full 400 interest goes to the appropriation account, not to the interest or other income. Okay, it doesn't go to statements of profit or loss. Next up, interest on the current accounts. Both of ours, we were lucky we're in a credit balance, so that will be nice and easy. Here we will go back and look at the current account balances. Let's go to our child balance, and the current account balances for blue, 1060 and 2,800 at the beginning of the year. To do our calculations, both were at 5%, exactly the same as the capital account in this question. So for blue, I will be going 1,060 credit balance times 5%, and for red, I'll be doing 2,800 times 5%, giving me the figures of 53 credit in the current account for blue and 140 credit for red. Gives me a total debit that needs to be passed to the appropriation account for interest on the current account being 193. Okay. Now, ladies and gentlemen, I'm hoping that you've already tried these journals and you're watching and correcting as you go with me. Okay, you shouldn't be doing these for the first time with me. What else in terms of our template? We had to deal with salaries and bonuses. Here the bonus was being called a commission, and we had to do a funny calculation for that, right? Okay, so partner salaries. Let's go back to our question. I think it was only Red that was getting a salary, if I'm correct. So let's have a look for Red's salary. So we know it still needs to be accounted for. I've just lost it for a second. Maybe it was on the previous page. There we go. Red is entitled to a salary of 1,000 plus 10% of comprehensive income after deducting salary and interest. Let's go and do that together. So once again, the salary has been debited to the appropriation account and credited to Red's current account. So I'm debiting 1,000 to the salary, and I'm crediting his current account and making the equity account bigger. The partner commission now, we've got to go and do some workings. Let's do the workings for the commission. So the first thing to do was to work out the total comprehensive income. Okay, now as total comprehensive income, we can quickly pull it up and do it together. But what I'm going to do is I'm going to refer this just now to Part AI, the statement of profit and loss and other comprehensive income. I'm going to ask you just to trust me that this figure was 12,643, and I'm going to calculate this on the statement of profit or loss and OCI just now. Okay, so the total comprehensive income going to have as 12,643. Haven't calculated it with you yet. Just assume that it's there, please. Okay. Then I'm going to take off the salary for Red of 1,000. I'm going to take off the interest on the capital accounts of 1,250. I'm going to take off the interest on the current accounts, which you've done already, which was 193. And then I'm going to add back the interest on the drawings, which was 400. So that is 10,600. I'm going to times that by the 10%, which he gets as commission, and Red's commission is then 1,060. Okay. Please remember, I will be coming and doing that 12,643 with you just now. Okay. So let's take that 1060 and put it in. 1060. Okay, now let's move on. We then need to do the drawings journal, which needs to get closed out to the current account. And that drawings journal is going to be quite straightforward. Let's have a look in the trial balance. Drawings were 9,000 for blue and 3,000 for red. So blue was getting 9,000 debited to equity via drawings, and 3,000 they took out, okay, for red. Now let's assume that all went to bank. Okay, we're creating the drawings, debiting it. So that is in total 12,000 crediting. They weren't very specific here, but we have to assume it goes against bank. Okay, recording of loan accounts. There were none in this example, so we can move on. Then we're going to take our year-end closing entries and transfers and take it to the trading account. And this is where I'm also going to land up working out just now in the profit and loss account your profit of 12,000 for that commission we were dealing with a few minutes ago. So, trading accounts, sales. Jumping back into our trial balance here. Sales was 340,628. The nice thing is there was nothing else here. Okay, so nice and easy. Sales, we are debiting 340,628. Crediting, there were no settlement discounts. There were no sales returns. So therefore the credit of 340,628 will go to the trading account. Cost of sales, a similar story. Here we will credit the cost of sales account. How much is in cost of sales? Cost of sales, 306,000. Remember that carriage on sales is carriage on sales on what you sold. Okay, so if it was carriage on deliveries, then it would be, or carriage on purchases, then it might be in cost of sales. But carriage on sales is not going to affect this at all. So trading account and cost of sales. Cost of sales is 306,000 to be credited to clear out the cost of sales account, right? Remember, cost of sales was an expense, was originally debited. We are crediting it here and taking it out of cost of sales and putting it into the trading account. We are lucky in that there was no settlement, discounts, etc. Okay, so nothing to go in there. So in terms of my general ledger now, I have posted and I'm doing the trading account general ledger. I get 340,628 and I credited the 306,000 with the contra account being cost of sales and contra account being sales. I then add these up and I get 340,628. On the highest side being the credit, the 340,628, I then carry across. Balancing figure is going to be 34,628, and that is going to be equal to gross profit, and I will take it to the profit or loss account. Let's do the journal to take it to profit or loss. So I have debited the trading account, 34,628, and I will credit profit or loss account, 34,628. Okay, all we're doing is closing the trading account to the profit or loss account. Right, so that leads us into the next item, right? That leads us into doing the profit or loss account. Here, was there any other income? Was there investment income, interest income? No, there was none. But what I can do now is bring in all my individual expenses, right? Now here we're going to work together. The salary expense, I'm going to do in red, was 12,189 if I'm not mistaken. Let's have a quick look. Salaries was 12,189, but we had a little adjustment, didn't we? We did our debit salary expense 69. So let's pass that in here. 12,189 plus 69, which was working 2.5. Okay, and that salary is then, the salary expense is then going to be, let's add that up, salary expense 12,189 plus 69 is going to be 12,258. Okay, double check that on your calculator. I'm doing that in my head. It might be a bit rusty. My maths is terrible. Okay, so it's 12,258. Then advertising expense. We remember that there was a little adjustment on that one as well. So let's go to advertising, and advertising expense, if I can find it, was the 4409 minus the 948 prepaid expense. Okay, and that is 4409 minus 948, which I did in working 2.7. We did a little journal for that. And that leaves me with 3461. Remember, I'm crediting these expenses because they were originally debited in their accounts. I'm clearing them out. So I'm taking salaries back to zero at year end, advertising expense back to zero by crediting it. And it's all going to land up in the profit or loss account. Admin expenses. Admin expenses were straightforward. That was 2622 straight out of the trial balance. Then insurance. We also had a prepaid expense on the insurance. Insurance, if we have a look for it, insurance expense was a 364 minus the 62. Okay, 364 minus 62, and that gives me 302 being the credit. Then delivery on sales. Delivery on sales, well, that was a straightforward, nothing else to worry about, 203. Remember, it's delivery on sales, so it's in other expenses, not cost of sales. Credit losses, if we recall, we had two items in there. Credit losses, we had 20 on the irrecoverable loan and the 200 on the movement. So 20 plus 200. Okay, and let's be smart and keep referencing working 2.1 and working 2.2. So that gave me a total of 220. Depreciation expense, let's have a quick refresher on what we did there. Depreciation expense was 2319. And let's just reference that to working 2.3. We did all of them together. And the interest on the mortgage, well, that was the straight 600, and we're going to put that into finance costs, right? That's going to be finance costs, not part of the other expenses. All of that gets summed up. And I know these ones altogether are 21,385. And what we're going to need to do is we're going to need to add that to the 600. Let me pull up my calculator quickly. And we'll end up with 21,385 plus 600 gives me 21,985. Okay, so we now have got all the movements into the profit or loss account. Let's go and do the general ledger quickly. We brought in the trading account. And the trading account was the gross profit brought in, which we did the first journal for. Back here was 34,628. Okay, so that's the first one, the 34,628. Then we had all of our individual expenses, which I'm going to just cheat a little bit because we're a little tight on time. All of those you'll list independently, and that came back to the 21,985. I then add up, and my total, the highest one goes in the bottom columns, 34,628. 34,628. And what does this leave me with? This leaves me with my net profit of 12,643. Okay, does that 12,643 look familiar? Bear with me for a second. I'm just quickly running back up to where we did our commission calculation. Remember at the bottom here, there's my 12,643, and there we can actually reference to the profit or loss account for the net profit. Okay, so please remember where that link came from. I jumped ahead a little bit to do that commission, but I wanted to just show you the nice flow of how we get to where we need to get to. So that 12,643, that is going to need to go into where, guys? The appropriation account, and it represents the net profit. So let's do that next. We are now going to debit the profit and loss account with the 12,643, and we are going to credit the appropriation account with that 12,643. Great, we're making progress. We're almost through all these general ledger accounts. The big one comes up next, which is the appropriation account. So we've done the journal to transfer in the profit or loss, the net profit. Now we need to transfer all of the individual amounts that we did right up front in this video. Remember, we kept going and calculating interest on capital account, drawings accounts, and it always has this little appropriation in brackets because we were taking items to the appropriation account. Now we're going to close those little sub accounts out to the actual appropriation account. So let's do that together quickly. We're going to take the interest, we're going to credit it this time, and we are going to debit the actual appropriation account. So our interest on the capital account was 1,250 if you remember correctly, and we will put it into the appropriation account. The interest on the drawings was 400, and this time we are crediting the appropriation account and clearing out the interest on drawings. Then the interest on the current account, we were dealing only with credit balances, so here we're dealing with 193 being transferred in and debiting the appropriation account. Nice and easy. Last one up, the partner salaries. Salaries, if I remember correctly, was 1,000. We debit the appropriation account and clear out the partner salaries account. The partner commission, that was 1,060. Debit the appropriation account and clear out the partner commission account by crediting it. Okay, then there was no other reserves. There was no asset replacement reserve, so we can ignore that part of the journal. Now we can get down to doing this appropriation account. Now this appropriation account is quite straightforward. The first journal I did was transfer in the profit or loss. The profit or loss, the net profit, was 12,643. I did that journal right after doing the closing out of the profit or loss account. Then my interest on the drawings we've just done was 400. Interest on the capital account, 1,250. Interest on the current account is 193. Partner salaries for red was 1,000, and the partner commission was 1,060. We then add up. The highest side will be the right-hand side in this case, 13,043. Do a little check with pencil maybe before you just go write this figure in. Add up both sides. And then you land up with a balancing figure being 9,540, which I now need to split between the current account for blue and the current account for red. Here you have to look carefully at what was given to you in the question. In the question, you were told the partners shared profits and losses in the ratio of their fixed capital, which was 20 versus 5, being a total of 25,000. Okay, so let's go and do that split now in our journal. The current account for blue is going to be the 9,540 times by 20,000 over 25,000. And that gives me, or gives blue, 7,632 Rand that they do. For red, he gets 9,540 times, times 5,000 over the 25. And that, ladies and gentlemen, is 1,908. So I'm not too worried about this balance on top here. That's not an actual account. That's just getting the 9,540 in order to do the calculations. And that balance was the difference between the subtotals and the total before balancing, the 13,043. Right, so that was nice and easy. I'm now going to transfer those two balances into the current account. So I'm debiting the appropriation account with the full 9,540 and splitting it in between the current account for blue of 7,632 and red 1,908. Great, that's the journals done. We haven't scored any marks yet. Remember, this is the stuff that you should all be able to think about and know in the back of your head without writing anything down. I'm happy that if you do the journals properly this time and you do the general ledger properly this time, the next question you do just the general ledger. Thereafter, you go and you try straight to the statements of profit and loss, statements of changes, etc. You'll see in the next video that that's actually quite easy. Great, guys. Thank you. Make sure you get these correct.